Hello everyone, today we are going to do a fundamental analysis in Coca-Cola's company, which will be based on my dividend discount model calculator and with my discounted cash flow calculator. So we are going to figure out how enough well is the Coca-Cola's health, since we can actually reduce the risks that somebody could take if we would like to open a position in this company, due to the reason that we are going to take into consideration all of the elements which actually can manipulate and can influence this company. Initially, I would like to start from discounted cash flow calculator, due to the reason that I consider it's much considerable element for a company, since it actually provides to an investor a good image of what inflows and outflows in a company. Okay, so let's start and consider that our initial investment can be 10,000. Fine. Right now we are going to seeking for weight average cost of capital, and as we can see is 7.7%. We are going in our model and write this percentage. So moreover, we need right now the average percentage of free cash flow, and we are going to figure out here. As you can see, the free cash flow is here and for years 2023, and as you go back is the previous years in this time. We are going to select it and adjust it here. Nice. As you can see, we have this calculator has already calculating the average, the potential future cash flows, which all of this based on WACC, the net present value, and it has already compared the initial investment, the potential future cash flows, the net present of these, due to the reason that we need the net present of all of these cash flows, and of this comparing we take a good price, a good number about the 4,000, almost 4,300,000. Okay, and as you can understand, the answer here, is it worth, is absolutely yes. So it's a first good element for us to understand that okay, it can be a company which actually we could invest. Okay, right, come on and keep going on our dividend discount model. And as we can understand, due to the reason that Coca-Cola's company provide 4 times inside of the year dividends, we need this model which actually about the 4 time inside of the year the dividends. So we are going to come here of the dividend information, which actually provide us all of these issues, all of these elements that we need. In 2020, we need the growth. Okay, we do not need exactly these numbers per share. We need the growth. As you can see, it's a 2.5, 2.5, 2.5, and 2.5. Perfect. We are going to come in our model, write this number, and we are going to adjust it in all of these years. Perfect. In 2021, we are going to do the same typical, okay, calculations. The 2.44, just come here, write this, and then you can adjust all of this in our sales. In 2023, okay, we just come here and taking into consideration all of these elements. 4.76, 4.76, 4.76, 4.76, 2022, okay, not 2023, and adjust it. Okay, and about the 2023, okay, we can see that we have enough dividend growth. Okay, maybe it can be fallen a little bit, but it's a nice growth. Just the reason it's a good image for a company, because something like that, it can be fluctuated not so much, so it's much considerable for us. And the only big calculation, a big, for example, fluctuation on dividends growth was just in 2021, if we are going to compare this number with number on 2022. So, and in 2024 we are going the same Okay, the 4.755 and 5.43. Okay, we are going to write here 75. Okay, and here we have an increase 5.43. 5.43. Okay, and right now we need these two numbers here. Okay, I would like to take the average of the previous years because I didn't want to expect something from my mind. So we are going to understand how was the difference in some years ago. Okay, as you can understand right now, I would like to take into consideration where the previous year's differences. For example, the first one was minus 0.24, and the second year we have a good increase. As you can understand, as you can understand, if you are going to calculate these numbers, okay, and do it from this, yeah, it's much further. So we can right now just minus this from 0.024, and right now we have 0.92, and the last one was we have a decrease. Okay, not so big decrease, and it's not something so considerable to evaluate again the company. It's not something terrible because everything something like that can happen in the economy, in the company's health. So we have minus 0.04, and we had this number minus 0.04. Okay, and this number actually would like to adjust here on 5.43. I would like to be a little bit strict for this company, okay? And I didn't want to just to show you that the company can have some growth in future. So in here I could actually write this number, and we could have a good valuation of the dividends growth. Okay, if you wanted to do something like that, you can absolutely do, and you can see a good the better the as you can the better prices, better numbers for this company, and maybe you can actually overvaluate the company if you write this number or numbers that actually provide a growth on dividends model. Okay, so I would like to write here exactly the same number, the 5.73, or even if you can write here the 5%. For example, maybe can something like that can happen in 2024. Maybe some losses, maybe they would like to reinvest the money, maybe they didn't want to provide so much for a dividend for the shareholders. Everything can happen. Okay, so I would like to be a little bit strict and put just 5%, but actually you can take the average as I showed you before, all of these numbers, all of these quarters, and the third and the last one, and to write the numbers that actually they related on these quarters for this previous year. Right now we would like to take the last cash amount of dividends per share, and we can take this number here. We could write the annual dividend, and I believe that it's enough, well, if you would like it, because it's something that provides us a good picture of the last amount of cash dividend. The last one that we need is the dividend yield, which is much important for our company to understand, and this is much higher for companies which actually provide dividends. And if investors and traders know about the dividend yield, if you're going to compare this company with others, could tell her, or whatever it can be, that this is a huge number for a company, and it's something that provides us a good, for example, feeling for this company to invest. But come here and just write this number to understand what can happen. So our model actually have provide us to the present value of the dividends, and as you can understand, the fair value is here is 25.24, and right now there is something much interesting happened. Someone could wonder, oh, it's the fair value is much lower from the Coca Cola's company, but our model here in discounted cash flow show us that it is worth to, for example, to invest in this company. I would like to show you one more technique right now, one more scenario that all of the investors and traders, I believe that they actually have to keep in their mind. And it's something like that. It's something like when everything can show you that everything it can it be possible, never forget the company's chart, the company's price, okay? The fluctuations that happened before. Because all of these calculators, all of, for example, on technical analysis, we maybe we are based more on some indicators, on trade lines, on flag patterns, and whatever can be, and they're waiting for example, on for some confirmations to touch on the price and then go back again, and all of this. We never need to forget the stock price generally. What happened, for example, in the long term? As you can see here, the chart is in the long term, is always going an uptrend. They have already provided us a good parallel channel. If we are gonna to draw here, okay, and it's an uptrend which actually has already started from 2005 year, okay. It's much positive for this company to go much higher and higher, but as you can see that the last 3 or 4 years the stock price of Coca Cola's company has already increased 47%. Yeah, and for companies which actually provide dividends and they are not huge, for example, on a growth or something like that, it's a huge number. Okay, so what you need to take into consideration right now, because all of this happened, I show you that there's two scenarios. We had good scenarios from financial cash flow. There's some not so good scenarios from dividend growth, about the annual dividend, dividend yield, and all of this. Okay, so I believe that it's not a good investment, for example, right now in Coca Cola's company, okay, because it's much higher from the price that was before 1 year or 2 years ago, okay. But if someone would like to take a dividend for a company from a company which actually provide enough dividend every quarter of the year, and it's something like for a passive income, yeah, it's enough. Well, but if someone would like to open a trade and invest in this company, I suggest to this person to hold this company for future, okay, because maybe something can happen and the Coca-Cola's price can be fallen, and maybe could someone could afraid of this, could worry, or what else right now, what he actually has to do, okay. I believe that it can be a long-term position because they provide a dividend. It's something good for people who actually would like to have some income inside of the year, but only for this I just suggest him, if someone have in your mind that, yeah, that I would like to take the passive income and not something special from that, okay. So never forget to taking into consideration the company's price, or whatever it can be. Maybe all of your analysts can be show you that, okay, it can be much higher from the price that is right now, okay. But never forget to illustrate a company's chart as better as you can, because it can be much helpful for you to understand what price range can provide to you. For example, if it can touch the 75, as you can see in the some years ago, it not just touched this level, never, okay, and can become here back much easier. Maybe I don't know what can happen, for example, in the future, but I believe I show you the scenarios. If the stock price was here about the 42, okay, watch was fallen in 42, maybe I just show you that, okay, you have show some tolerance and to understand that, okay, you have some potentials to go up because these prices have already touched and this is in the middle of the previous prices, okay, something like that can happen. But right now I believe that the price in is in a good price. Maybe it's overvalued if you are going to thinking of discounted from the dividend model, but from discounted cash flow it's it's enough good to invest. It's something that you have to hedging in your mind and to understand what can be the speculation and your, for example, that you're increasing your portfolio if you are going to invest in this company. Okay, so never forget to check all of these elements that actually can manipulate and influence the price. Thank you very much for the video. Please push like and subscribe to support our channel. Goodbye.